Hello guys, what is happening? And welcome to this live stream on Monday morning. I apologize for the delays in getting going here. So anyway, we're talking about the Canadian dollar here today and what's happening with the dollar. The dollar has fallen sharply. And one thing I want to say is that it was already in a downtrend. So I'm going to quickly bring up this chart so you can actually see it for yourselves. You can actually see that it's been in this downtrend for a while here. And it broke this downtrend a couple of weeks ago, about 45 days ago, I believe. So you're looking at a couple of weeks ago. So you can see that it literally broke down from around the 12th of August and it's come all the way down. It's made a sharp move to the downside from the 12th of September though. But what is interesting about this move is it doesn't correlate with any of the normal things that you'd expect the Canadian dollar to trade on. And this is the thing, when you have to compare these currencies to other currencies, you begin to notice that things just don't quite add up between the currencies. And that is the thing that is very, very interesting about what's going on with the dollar. Now, one thing I noticed is because oil has been selling down. I mean, I know it's up today, obviously, with the OPEC thing, but it's been selling off since June. And the Canadian dollar wasn't trading really with oil before then anyways. Now, oil definitely acts as a tailwind and a headwind to the currency, but it doesn't trade on oil. And one thing that has been noted is when the interest rate hikes have happened, you've generally seen that as a positive move, as in the Canadian dollar moves higher. Now, what's really interesting, and one thing that I've noticed, and I think this is a bad sign, I think this is a sign of something bad is happening within the financial system that we can't see. And as outsiders, we have to observe things that don't look normal, things that are out of the ordinary to kind of get a gauge on what is happening. Now, thing is, I noticed that around the same time that the Canadian dollar started moving lower against the US dollar, bonds essentially went into a sideways range, whilst US treasuries, UK government gilts, a lot of other major currencies, even Australian bonds, they were going up during that time. So the yields were rising, implying more interest rate hikes, and getting more of a yield is better because that attracts investment into the currency, because they think, well, I can get a yield, that currency is fairly stable. But you've got currently right now, like the 5-year Canadian bond is at 3.3%, around that level last time I checked. And the same 5-year Treasury is trading at nearly 4%. That's a big difference in the spreads between the Canadian 5-year and the US Treasury. And you've got to ask yourself, well, why is that happening? Because here's the thing, guys. If outsiders were actually buying those bonds, then you would see this currency right here. You would see it rallying, but you're not. You're seeing the opposite. It's actually going down. And I know today it's up sharply, but start of the month there's going to be a lot of volatility with stocks being at lows from last Friday, closing up right at the lowest point of this year. So the thing is, you have to kind of ask yourself, well, why is that happening? And the only logical conclusion that I could come up with is that you've got domestic demand for these bonds. So that means that people within the Canadian financial system are buying those bonds. So why would they do that? Why would financial institutions, primary dealers, buy those 5-year bonds, or whatever bonds? All the Canadian bonds have pretty much just been on pause since this currency started selling off here. So, and I talked about this in the video yesterday, and I touched on it briefly, and I just wanted to explain what I was thinking when I put that in that video. But essentially, like, the bonds have just traded sideways. So you've had people fleeing the currency still, because that is obvious. Just look at the chart that I've got here. So people are fleeing that currency, but there's still demand for the bonds. So that means somebody's buying, and it's going to be institutions, it's going to be primary dealers. And if they're buying, that means they possibly know that something is coming that is going to push these yields down, at least they think. But as we know with what happened in the UK just last week, that's not necessarily going to happen. It's not necessarily going to play out the way that people think. And another thing is, guys, I want to take you over to this chart. And this just shows you how large the Canadian real estate bubble is, and the New Zealand real estate bubble, and the New Zealand dollar, and the New Zealand bonds, funnily enough, are trading very similarly to the Canadian dollar. The Australian dollar, not so much. It's been much more stable than the Canadian and New Zealand dollar. But look at this chart. This just shows you the insanity here. And I believe, yeah, it's an interactive chart. So if we go back to 2000, the start of the millennium, you had $0.41 trillion in mortgage debt. And fast forward all the way to the latest print, which is May 2022, you've got $2 trillion in mortgage debt. $2 trillion. And here's the thing, this really accelerated since around the Trudeau government got in charge, because look, you're around $1.2 trillion. You've gone to $2 trillion in the case of pretty much 5 years of this government. And part of that is a lot of the response to how they have spent and deficit spent, and basically just injected a lot of stimulus into the economy through their deficit spending. And a lot of the growth that has been achieved has just been achieved through inflating asset bubbles like this. It's not real growth. And that's why we'll eventually see a recession, if not a depression, here in Canada. And I honestly believe it's probably going to be the latter. And I think it will be the latter in the sense that it's going to last decades. It's not going to be a quick recovery. Because Canada and Japan are so similar, and that's another video that we could get onto, because we could talk about that for a long time. But the same response that basically Japan had, which collapsed their bubble, Canada is having that exact same response right now. And $2 trillion in mortgage debt, if the government even has to bail out $1 trillion, if prices go back to 2014 levels, which is highly possible, and then that wipes out $1 trillion worth, and they have to come in with $1 trillion stimulus package, then that is just going to absolutely decimate the Canadian dollar. And this is one of the big risks that you have in this financial system right now, is this bubble that is blowing up in the face of everybody right now. And it will be interesting to see how this goes going forward. And this chart, funnily enough, was the chart that I was having trouble loading up, because I really wanted to show you this chart because this just illustrates how ridiculous and the mania that we're in. If you look prior 1990 to 2000, it was pretty much, you know, it went from 0.24 trillion to 0.4 trillion. So it just under doubled. But look where it's gone, like, to now, it's like quadrupled. So that is just a massive, and you can see how this is just steepened. It would be down here, you can't see my mouse, but it would be, you know, the trend would not be this high. This is a mega debt bubble that has been created, and it cannot last forever. This is what I want to get through people's head, because I just do not think people get this, and it drives me absolutely nuts. Is the fact that this cannot last forever. Even if they manage to kick this can another 4 years, whatever, which I think would be practically impossible with the amount of money that would be needed to do so, it won't last. It will not last. So, you know, trying to bet on this thing lasting forever is a failing bet, in my opinion, because ultimately it cannot last forever. All these bubbles pop. You know, there's no example in the past of a bubble that came to a soft landing. It just doesn't exist. I know central planners and politicians like to think that will exist, like, oh, Canadians, they're always going to pay back their mortgage. You know, nothing bad is ever going to happen. The banks are rock solid here. You know, we haven't had no financial crisis. Well, I did a video ages ago. Maybe I should put it in the pinned comment after this video. But I did a video on how Canada avoided 2008. They just inflated more of an asset bubble. They made it worse. If they had took the pain, if they had took the punch in 2008, it would be a lot better than it is right now. But you've had consecutive governments, you've had Conservative and Liberal and NDP now, governments that have all done the same thing. Nothing. They can't do it because they're always posturing towards what the voter wants, and the voter always wants a free lunch. They always want the Stimmy checks. That's always what they want. And the problem is we have created a society now that is addicted to this heroin. And that's the danger, because where people vote is just based on what they get. It's not based on what the tough decisions that government is going to have to make for the better of that country eventually down the road. It's the same thing. It's just this heroin, this Stimmy check reality. But another thing that I want to show you is this. And this is a great chart because you can see how essentially the government debt was fairly stable until Justin Trudeau got in charge. And then deficit spending just went through the roof. But again, what you have to realize is people voted for that. People actually voted for that. So even though I'm saying, yeah, that is absolutely terrible, but people voted for that. And people are always going to vote for what they get. It's like I said, they're never going to vote for the long-term better decision to make. They're always going to, and there's not even a politician that would even support a long-term view or growth. There's no good options when it comes to politics, and that's the problem. And even though we've got Pierre, who is now like a great leader, and he has at least a good understanding of economics at a basic level, unlike Trudeau and Freeland, who are just a journalist and a drama teacher, you've still got to ask yourself, well, his party is going to control him. Like he's just saying what everyone wants to hear. I've seen this CD playing a million times. Politicians just going, I'm going to do this, I'm going to do that, it's going to be fantastic, and whatever. And they'll get voted in. I'm sure he'll be the next prime minister. I'm sure he will be the next prime minister for sure. But still, like his party is going to control him to a certain degree. And he will get manipulated in the central planning process. And I'm sure he will do good things in his time. But the net result is everyone's thinking that it's going to be the rosy view. And it's just not going to be, because the carnage that has been created is just so large that you can't. The best way of explaining this is if you imagine the Titanic and it's heading towards the iceberg, and they call it out. They say, iceberg, dead ahead. And they start turning the ship. They still hit the iceberg. The ship still sinks. And that is the reality of what's happening right now. That is the exact reality of what's happened in the UK over the past week. The Bank of England's come in. They've said, iceberg, dead ahead. They've started steering the ship away. They're still going to go into the iceberg. The ship's still going to sink. But it's just the damage isn't going to be as bad as it was. But the net result is people are still going to be dead at the end of it. And a lot of people are still going to drown as a result of it. And that's really where we're at. And I'm sorry to take a turn like that, but it really is the reality and the truth. And people need to be clear on this and understand this, because I think a lot of people are living in la land at the moment. And just quickly, let's compare this to the Mexican peso and look at the chart difference. There's no massive cataclysmic sell-off that you saw right there in the Canadian dollar. So, and I think that tells you something. And it's not just the peso as well. There's other currencies as well. So anyway, thank you so much for watching this. If you enjoyed this video, maybe you'll like that one there, or maybe you'll like that one there. And I will see you in the next video, guys. Take care of yourselves. Bye-bye.